Good morning, everyone. Thank you for joining us today. Sorry for our delay, only 3 minutes. I'm sure that more people will join us, but we can start now. My name is Marta Fernández de Alarcón. I am the Secretary General of the Spanish Business Council, and I want to welcome you to this webinar about UAE Business Essentials, e-invoicing, and cross-border investment with one of our members, BDO Legal. As you may know, BDO Legal is a full-service law firm combining extensive knowledge of the UAE's legal and regulatory framework with the global capabilities of the BDO Legal network. So we are happy and we are very pleased to count with them in the chamber. Today in the webinar, the main discussion will give us an overview of the UAE invoicing framework and also the key considerations businesses should take into account when selecting an ASP. I don't want to rest time to our speakers today. I will make it short, this introduction. I'm delighted to present today for this webinar our experts from BDO Legal, Ashish Athavale, partner. He will talk about the key considerations of selecting an ASP for invoicing. And Sheheen PV, a partner also, he will talk about legal framework for structuring cross-border investments into the UAE. So I want to say thank you again for your collaboration, for your support today and always. At the end of the webinar, we will explore a Q&A period with the speakers. And also we will, at the moment that we finish, we will edit this video and we will upload it in our YouTube channel for all the people that wants to have a look. So thank you so much, and you can start now. Thank you.
Thank you so much, Martha. So I'll get started with my part of the session. I am sure that most of you would have heard that UAE is going live with e-invoicing. Many of you would have gone through a number of sessions, so I will kind of try my best to keep it light and focus on to the topic for today, which is more so about the selection of an accredited service provider, ASP. So I would like to start the session by giving a brief highlight on how the model works. Okay, so here from a UAE perspective, what we have is a unique model. Okay, which I have tried to draw a little bit of is a comparative with what you could have in Spain. Okay, and how the UAE model is different. Okay, so just at a very highlight, kind of a level, this slide seems to be pretty busy, but just focusing upon the spirit of the slide. Okay, this may be seen as a network, through which invoice level data will be exchanged. And starting 1st of January 2027, the whole of the UAE goes live on this network. Now, the UAE model is what you see on the rightmost side of the slide. This is a 5-corner model. Okay, it is not a hard clearance, kind of a model what there is for Spain. So Spain has, kind of implemented a pretty complex model, I would say. It is hybrid of the two models, depending upon the type of the supply that you would want to do. And this could be seen as a hard clearance model where the government, plays a bigger role. Whereas from a UAE perspective, we have a kind of a decentralized model. Just to put it in a very layman terms, from a UAE perspective, the FTA or the MOF plays the big brother role, where they see that whether all the invoice flows are happening, and they will keep a log of the traffic and also be informed about the invoice flows. But does that mean that each and every invoice will be validated by the government? At this point of time, the answer is no. But what you will see as a business is when you are acting as the seller or the a service provider, you will see a unique ID referred to as the UUID, which will be generated and which has to be then printed on your invoice, which becomes an official UAE VAT invoice for circulation. Moving on to the next slide, I have detailed over here the UAE five-corner model. Okay, and this will be my landing slide for the purpose of going to the concept of ASP, which is an accredited service provider. So just at a very high level, okay, from a UAE perspective, similar to that of Spain, okay, we are not going to have the connectivity directly with the Imara tax portal, which we have as of today. So what the government has done, and when I say the government, there are two bodies involved over here. It is the MOF and FTA. So what we have as of today is the FTA Imara tax portal, which is there on which you do your VAT return filings. Okay, but as we move on to the invoicing regime, okay, you will not have this opportunity to directly connect onto the Imara tax portal. What the government has done, and reflecting from the previous slide, that they have come up with a decentralized model, means that they have nominated certain providers who will be acting as the connectors between the businesses and the government, which is referred to as ASP. And hence, selecting the right ASP is a very critical area that the businesses should be focusing upon. Now, just to maybe break it down into simple layman terms and kind of give you a or maybe comparative from our normal lives, that what this means. Okay, so all of us use a mobile phone. I mean, mobile phone has a SIM card. So ASP can be compared to the SIM card, which gives you the connectivity to the government or the regulated platform. So when we use the term ASP, please see it that we will be acting as a connector between the government and the yourselves. Okay, and what lies beyond that of an ASP is where we will focus as of today. Okay, going back to the live case that I was speaking about, that suppose if you are going to get the SIM card from Etisalat, Do or Virgin, you will always have the flexibility to use your own phone, which could be an Apple or Samsung. Okay, so the focus for today is not more so on the connectivity because that is the regulated platform, but what lies between the connectivity and what are going to be the value added features of the ASP that you can use for your businesses for the data to flow in a seamless kind of a manner. So to focus onto the screen, okay, and going back to my live example, this seems to be pretty complicated, but you as the business should just see it as simple as making a phone call. When you are kind of making the phone call, you have the phone number, your device has a unique identification network, and generally here in the UAE, we use the global system for mobile communication, which is the GSM network. So similar to the GSM network, here in the UAE, we have adopted the PayPal network, which is the Pan-European Procurement Open Source Platform, which is generally used from the perspective of invoice flows. Okay, what does that mean? That when you want the data to flow, it has to go through a regulated kind of a platform, and the data should flow in a pretty seamless manner. So focusing on to the five corner model in the UAE, okay, when we say that you have to select the right ASP, we are talking about C2 and C3. Now, just going to a very kind of a basic flow. Okay, C1 is going to be the seller. The C1 sends invoice level data. They do not send an invoice yet. They send invoice level data in a particular format as per the 51 fields which are defined for the UAE, referred to as the UAE PINT. Now, this data gets transmitted to the ASP. Okay, the ASP then does two parallel flows. One is that it goes to the government, and one is that it goes to the buyer's ASP. And from the buyer's ASP, there will be, of course, validations at the various levels, and this data then goes to the buyer, which you can see C4 over here. Okay, and then C3 gives a kind of a machine readable ping to the government stating that okay, the information has flown and it has gone to the buyer. A very relevant, point to note over here is that when you are acting as a buyer, this is a unilateral flow. So as a buyer, you don't have the right to maybe accept or reject an invoice. If there are any discrepancies in the invoice which you want to correct, then the debit note, credit note remains as an option. And again, that will flow, through the network. So once the C3 gives a ping, to the government, stating that the data has been sent to the C4, okay, the government says that, okay, the flow of information has gone through and gives you a unique ID referred to as the UUID along with a timestamp and date, which then goes back to the C1 and which will become the new data field that you are going to print on your invoice and flow through the network at a later point of time. Okay, given the fact that you as a business don't have an opportunity to connect with FTA directly, and it has to flow through this kind of a network, selection of the correct ASP and evaluating what opportunities lie beyond that of just getting the connectivity remains a kind of a critical area for your ASP selection. Now, just giving a high level, kind of a comparative between what you already have in Spain and what we are going to have over in the UAE. Now, Spain has not adopted the PayPal network yet. They have their homegrown network, and most of the jurisdictions globally, okay, have gone through their homegrown network. But from a UAE perspective, they have adopted an international network called as the PayPal network. And the overall objective of the PayPal network is to take this, PayPal network cross-border. So as we have as of today from a customs perspective, okay, that you file a bill of lading in one jurisdiction and there is EDI exchange and the data goes to the port where the goods are going to land and you are in a position to generate a bill of entry. Something similar is going to be the vision of the UAE model. The UAE model, I would say, based on the PEPAL, the five corner model, okay, remains as one of the first jurisdiction globally which will be implementing decentralized five corner model. The nearest and comparative we have for the UAE could be Malaysia, where they have a four corner model and it is working well for quite some time. However, I mean, the difference is that what we see largely between the Spain model and the UAE model, okay, the Spain model actually has the invoice flows also going through the homegrown network. Whereas from a UAE perspective, we have only the data flows and then your invoicing, as you do as of today, remains that. And as the system settles down eventually, we might see enhancements to the PayPal network where your actual VAT invoice goes, through the PayPal network. But to start with, it is just the data flows, and you will have to generate a UUID, which will be printed on your invoice. Just a very highlight, I won't spend much of a time on this slide, but the UAE model is very unique. What they have done is that to start with, they have left the B2C part of the transactions out of this. They have started with B2B, B2G, and B2 exports. Yeah, it is covered. This is applicable to all the businesses other than which are pure holding companies, which are seen as earning maybe a dividend or a capital gain at a later point of time. A PEPAL model is, of course, what we spoke about. It is the uniqueness for the UAE. It will be a five corner model. Now, focusing on to who are not going to be subjected to this thing, the answer to that is very, very limited. Okay, barring these holding companies, this will be applicable for all the businesses. This is a very valid point for us to note that the e-invoicing, okay, goes beyond the concept of VAT, because even if you are not registered for VAT, you are still obligated to do e-invoicing, because e-invoicing has specific use cases, okay, having a commercial invoice or having a out of a scope supply. Suppose if you are into drop shipment, that is also the place where you will be covered for e-invoicing, and it goes much beyond that of the just being registered for VAT. Now, as this five corner model kind of is obligatory, okay, and has a kind of a service provider referred to as the ASP. The government has come up with certain stringent, timelines around that, what you should be noting and what you can see on the slide over here. These dates have been slightly extended, especially the first one, which was July of 2026, which is the due date for the purposes of selection of an ASP. If your turnover, and which by the way includes B2C as well, if it is going to cross 50 million, the earlier due date was July, and now this has been moved to October. And the go live for the perspective of the businesses for more than 50 million remains as 1st of January 2027. And for less than the 50 million, there is a due date of 31st March 2027 with a go live of 1st of July 2027. Now, I will take a pause over here, okay? Let it all reflect onto the fact that 1st of July 2027 remains the date when the whole of the UAE goes live on e-invoicing. So if you are going to be a business who is going to be subjected, to e-invoicing, you have to make sure that your sales as well as your purchases are coming through the five corner model. And it is not only going to be restricted to few businesses, which there is a misnomer that if you are only VAT registered, then you should be going for e-invoicing. Answer to that is no. So with this, 1st of July 2027 remains a pretty a kind of a cast in stone date where the whole of the UAE has to go live with e-invoicing. And of course, if you're dealing with any, government entities, if you are a large, contractor, there are certain relaxations over there for the purpose of those government entities to go live. But if your turnover is going to breach 50 million, you go live by 1st of January 27. And then if it is less than 50 million, you go live by 1st of July 2027. Of course, all of these are mandatory due dates, but if you as a business need to go live earlier, you can also take that call and be ready ahead of time, so you are not going to scramble once the network goes live. Now, here a key thing to note that if you don't do the selection of the ASP, and if you don't go live, and if you don't generate an invoice, we have certain penalties linked to that, which I will cover as a later part of this session. Now, focusing on to the concept of ASP, like I said earlier, okay, that this just goes beyond getting that of the SIM card. You should be focusing upon what phone are you getting, so that you are able to, see that what is going to be the quality, okay, how the phone is going to connect to various devices that you use. So starting from this high level, I would like to focus on to very critical areas that we need to keep in mind when you are going to be focusing upon the selection of ASP. Like I said earlier, that when we do e-invoicing, it is not only your sales side, but also the purchase side, which you should be keeping in mind. Okay. You should not be looking at the selection of ASP just as in procurement exercise. The reason is that there are multiple teams who are going to be involved over here, because if your volumes are significantly high, then we are looking at a direct integration of the ASP with your ERPs. And of course, all of that needs to be done securely, looking at your data security guidelines. Where do you want to host the data, where your data sets generally lie, whether they are on premises or whether they are cloud. If cloud, then which cloud, what to use, and how it is going to connect to the regulated ASP kind of a platform. Hence, working on the integration aspect remains a critical element. While generally ASPs will have certain common connectors, as we call it, but if you're using certain unique ERPs, which may not be so much localized for the UAE, then you will have to work on some development, which has to be done at the business's end, so the data can be pushed, to the ASP and to pull back. Then also you need to look at for the future. Like I said earlier, that B2C is not a part of this yet, but eventually we may look at that the B2C would also go live. So you should look at future scalability. as UAE has implemented PEPAL, and we are now looking at the region. You must have heard that Oman is also implementing e-invoicing, which is going to be, for the perspective of the PEPAL as well, which will have then cross-functional, cross-border functionality. So you should look at the future. If you as a business have got a presence in these two jurisdictions, the planning should be done well so that the ASP selected for the UAE does also offer you the same option in Oman or any other jurisdiction where the PEPAL model will be replicated. Uh, Focusing on to the part, okay, on the development of the connectors, which I spoke about earlier in a little bit of a brief, but now spending maybe a minute onto that. Development of the connectors remains as a key area, specifically when you are using any specific ERPs, because as per the UAE invoicing requirement, there is a schema that needs to be followed. A very simple example of this is that if your ERP is using the date, the US format, where the month comes first, whereas the UAE says that the date comes first and the month goes later in a particular format. Now, for this to work on a real-time basis, there has to be a focus onto the connectors to see that first the data, whether it is generated, whether the data can flow through the connector in a secure manner. After the data comes through the ASP, what happens to that data, whether the data will be transformed as per the requirement of the UAE pint or stays like that. If it stays like that for some reason, then you are going to look at potential rejection of your invoicing data. Last but not the least, of course, all of us are going to be worried about the cost. As we are speaking about invoice level data, which goes in a machine readable format, you should be sensitive about the costs also that could be involved. Just to give you a very brief highlight, there are usually the four phases. First is going to be a gap assessment, which we do from a tax and from a tech perspective. Second is going to be the integration. So suppose if you need any help for the purpose of integration, that can also be drawn out. Third is the one-time setup or the configuration of ASP with the data mapping, how the fields are going to flow through, whether the connectors work, whether anything needs to be done manually. And last but not the least, for the recurring invoice level data, which ideally for the businesses goes on a real-time kind of a basis. So these are the few challenges that we have seen that you should, kind of be encountered with you are going to select for the purpose of ASP. And that is the reason we have come up with a few points that you should be asking your ASP before you make the decision. I'm sure that all of you are evaluating multiple ASPs over there. Okay, so these are broadly the things that you should be asking them. First, of course, very critical, what is going to be the security? While ASP is a regulated platform and they will be mandated by the government on the data security guidelines, but you should make sure that whether these fits in with your global requirements or if there are certain uniqueness that can be worked about. Second is about the technical architecture. How do these ASPs fit in or connect with your ERP as of today? So we don't leave a kind of a situation where there is a technical flaw and the data does not go in a real-time basis. Then focusing onto the regulatory and the requirement side. Okay, because what we are going to see is that based on the data that is going to flow through the PayPal network, your VAT returns are most likely going to be auto-populated. So the ASP and the Imara tax portal, along with the customs connection that we already have for the Imara tax portal, all of this is going to come together. So there is going to be 100% visibility to the government of the each and every transaction that you are doing. So you should be very sensitive to the fact that whatever goes through this e-invoicing network may have certain far-reaching impacts, not only related to that particular invoicing, or maybe for the purpose of export clearances or any export of services that you may want to plan, because at least on the good side, we expect that the PayPal network and the customs in each of the emirate are going to be linked up. Next is, of course, the ASP should be taking care of the future regulatory changes. As I said earlier, UAE still remains very aspirational when they are going live with the five corner model. Okay, and it is a decentralized model. And what we have seen in Malaysia, that they have changed the ASP requirements not once, but somewhere close to 23 times. So you should ask your ASP that what happens if there are regulatory changes? Are you going to take care of that? Okay, the answer to that should certainly be yes, because this is an evolving landscape as we are getting into an aspirational framework. And 1st of July next year is not very far away from what we speak. Then, of course, your vendors, okay, the people whom you are buying goods and services from locally within the UAE should also be geared up, because for them, if you are a business, they are doing the B2B supplies, and there is no minimum threshold after the 1st of July 2027. So each of the vendors, the suppliers you are dealing with, the data has to come through the e-invoicing network. Then what you need to look at, that as your business grows, if we go to live to the B2C space, whether your ASP is geared up to handle that, or whether you would be needed to change your ASP in the future. And of course, last but not the least, linked to the fees. Generally, ASPs come up with a lock-in period, because there will be cost which you will be spending on one-time setup, a configuration which could have some degree of customization. So please be informed on what are going to be the lock-in periods as well. Now, very quickly, what BDO UAE has done is that we are also a pre-approved ASP provider. Okay, we are an ASP through our own company, which is BDO Digital Solutions. We have got the connectivity, what you can see on the screen, and we have got our own middleware as well. So you can read the middleware as the phone, that you will be using for making the call. Our middleware has certain value-added features, and these features have been built in with our experiences in Malaysia, Singapore, and all other jurisdictions where PayPal is going live or has gone live. So what our middleware kind of takes care is that there are certain data enhancements and data transformation tools over there. So if your base ERP is not giving those all fields, or maybe the data is not in the format that we had asked for, okay, the tool will have the capability to transform the data for you before it flows through the network. So with the connectivity, we have added certain value added features which will give you data transformation, which will give you the dashboards for the purposes of the tracking the data. And last but not the least, even if B2C is not included, our middleware has got the capability to auto populate the VAT return. Yet the VAT e-filing is not started. So this VAT return will be auto-populated basis the PayPal data and the B2C data provided to the network. So we have understood the needs of the UAE government. We have understood or learned from the challenges in the jurisdictions outside of the UAE, and have come up with a secure and a scalable solution which can take care of your needs to start with in the UAE. And eventually, when this PayPal network goes global, or it is rolled out to other jurisdictions, we are there to help. Last but not the least, I wanted to keep this slide as the last, because this is the, I mean, uh, uh, the time sensitive clock that we are running at. Okay, so based on the due dates that you saw earlier, okay, the government has come up with certain penalties. There are various line items of the penalties, as you can see on the screen. But if you fail to select an ASP, now you will ask me that what does this mean? ASP selection means that you have to log on to your Imara tax portal, and then you have to nominate one of the service providers as your ASP over there. You will see the name of BDO Digital Solutions there, and there are several other who are in the list. Okay, the government has told that there will be 100, but right now the list remains at 26 service providers. As you don't have an opportunity to connect to the government directly, and you have to go through the ASPs, and which is limited as of today, I would say, you have to make this move. Otherwise, there will be penalties starting for this, for the selection of ASP, for the purpose of going live, and for various other things that you can see on the screen. Okay, these penalties seem to be capped. but taking our learnings from the VAT regime, they are auto computed by the various portals of the government. So we should be sensitive about the fact that we should not end up in a situation of the penalty, because if you do so, like I keep on saying, that this is Dubai or Abu Dhabi, it's as good as running a traffic light. You will have to eventually pay that fine, how much ever you would want to dispute. So with this, I'll take a pause back over here. Now I hand it over to my colleague Sheheen. Sheheen is the managing partner of BDO Legal and will be speaking about the investment opportunities and the landscape between UAE and the Spain. Thank you.
Thank you very much, Ashish. Thank you very much, Mata. And thank you, Ashish, once again for that introduction. I will introduce myself further. I'm managing partner of BDO Legal. I'm in UAE last 30 years as a practicing legal consultant. So I'll have to share the screen now. Please bear with me 1 second. Hope you're able to see the screen. So we're going to talk about cross-border investment, specifically about the legal framework between Spain and UAE. And broadly, we'll be covering 2 or 3 aspects of it. UAE as an investment hub, the bilateral framework between Spain and UAE, which is specifically for the Spanish Business Council here, because you're all businessmen from Spain. And finally, which nobody wants to hear, but is very important to be heard, dispute resolution, the various opportunities for dispute resolution. We only understand the importance of dispute resolution normally when we reach there. But the homework, the preparations have to be done right from the beginning at the time when you're entering into a contract. It's all determined by the dispute resolution clause which you put in the contract. What normally happens is that, sorry, I'm stressing on the dispute resolution in the beginning itself, because normally what happens is you're tired of negotiating all the commercial clauses, financial terms, and duties, responsibilities of both parties. And finally, towards the end, last clause comes as a dispute resolution. You just leave it to the lawyers and they decide whether they want arbitration, whether they want a treaty dispute resolution, whether they want local courts here in UAE or DIFC court, ADGM court. Is determined by that clause. So there's no point worrying about it when you reach that position. This is something to be fixed right from the beginning at the time of inception itself. So with this, I go to the next slide. Now, coming to the importance of UAE, while I'm heading it as navigating the current climate in the UAE, I don't mean the geopolitical situation that's existing here. Here, what I'm trying to say is, why is UAE an important destination for Spanish investors? First of all, let's look at the geographical location. We are positioned in UAE as at the crossroads of Europe, Asia, and Africa, which we call the MESA, Middle East, Africa, and South Asia region. And UAE functions as a regional and global hub for trade, logistics, and finance. Think of the time zone itself. This is one place where during our working hours, we can interact with US and Singapore on the same day during our working hours, during their working hours too. So this is the unique positioning, geographical positioning of UAE. That's a big advantage. Then the regulatory framework. UAE offers a very strong investor protection through a structured regulatory environment. So international benchmarks consistently rank the UAE as a very highly on investor protection indicators, reflecting improvements in corporate governance, minority shareholder protections, and contract enforcement. I'll be dealing with it more elaborately in the coming slides. Now, the free zone ecosystem, I'm sure all of you are aware of the multiple free zones, specialized free zones available in UAE. It is almost 50 free zones we have here, and 2 of them are financial free zones, which are DIFC and ADGM. I'll deal with all the free zones elaborately in the coming slides. So again, why the UAE? Strategic case. What is special between UAE and Spain? Just look at this slide. The amount of investment or the transactions that have happened between UAE and Spain in 2024 touched a record high of $3.3 billion, and year-on-year growth is 17%. So this is a very interesting thing to look into. And UAE is the 6th non-EU export market for Spanish products. Number six, non-EU export market. And the investments made by UAE into Spain is in the range of $7 billion. So UAE is all the more interested than Spain because the investment that Spain has done in UAE is in the range of $450 million only. It's compared to what UAE has invested in Spain, it's only a fraction of it, maybe 6 or 7% of it. So all the more UAE is interested in protecting and promoting the bilateral arrangements between UAE and Spain as a friendly investment destination. Now, look at the number of licenses issued in UAE where Spanish businesses or individuals are partners or owners is 3,000 companies in UAE. So we'll go to the next one. And the free zone income tax 0%, of course, it goes without saying. Corporate tax is coming. I'll deal with it a little bit after this. So here, if you look at the investor perspective, the commercial companies law amendments. See, I'm sure all of you are aware of the foreign direct investment development, which took place in 2018 as a separate law, which got afterwards completely integrated into the UAE company law itself in 2021 through Federal Decree Law number 32 of 2021, which replaced the earlier company law, which was enacted way back in 1984, law number 8 of 1984. In 1984, when the company law was enacted, which remained in force until 2021, there was a national ownership requirement. 51% of all the companies incorporated in UAE, there was a mandatory requirement to have UAE nationals as the shareholders, majority shareholders. There were various ways used by investors to protect their rights, but end of the day, the UAE nationals officially remained as the registered shareholder, majority shareholder, owning at least 51% in every company. That was a challenge. This was almost done away with. Most of the type of companies, most of the activities in the positive list in 2021 officially. Then this company law again got amended by Federal Decree Law number 20 of 2025. Look at the development is very fast now. Within 4 years, the next amendment is coming. The first one took how many years? From 1984 till 2021. So the most interesting developments in 2025, I'm sure all of you are aware of the foreign direct investment and the removal of the national ownership requirement, which took place in 2021. But most of the businessmen have not been fully informed about what exactly happened in 2025 and why is it even more interesting for businesses. See, first of all, Article 76, if you look at it, it allowed classes of shares. Before, it was unknown in UAE. Only in free zones, you could have tried that, or you would have had to go through some offshore entities, layer it differently through Cayman Islands or BVI. Now you can have it directly on the mainland of UAE, having different classes of shares. Suppose you and me, we are shareholders 50-50 in a company, and you own Class A shares, and I own Class B shares. Class A shares may allow you to have better voting rights, better dividends, and more efficient mechanism for exit too. So this is very interesting. Investors can be treated differently within the same company. Earlier, it was mandatory under the company law that all investors, all shareholders are to be treated equally, which may not actually match the reality of the situation. And people used to find various ways to do it. Now it's straightforward, statutorily protected. You can have different classes of shares. Now come to Article 14, tag and drag along. Tag along rights and tag along rights. This is also providing efficiency in exit mechanism. See now two shareholders, one is a founder, one is an investor coming in. Suppose the founder wants to sell his shares for a particular price to a third party. Of course, the preemption rights applies. He has to first offer it to the investor, or if the investor wants to sell his shares, he has to first offer it to the founder. Even equal shareholders, they have to offer it to each other on same terms and conditions, which is called the preemption rights, right of first refusal, we can put it. So the tag along rights and drag along is, suppose I am selling my shares as one of the shareholders, I can insist that my shareholder should also sell his shares along with me in par with the same terms and conditions for which I am selling. Or if my shareholder is selling, I can insist that my shares should also be sold along with yours. So maybe the other shareholders has got the technical expertise or the managerial expertise in running the company. And if he sells his shares to somebody, I'll be dealing with a third party who is completely unknown to me. He's coming in as my shareholder, and I'm totally at his mercy. This is why these drag along rights and drag along rights are very important in any company. So this was completely missing in UAE until 2025. Now these rights are statutorily incorporated into the company law, and you can have these provisions clearly defined. UAE always respected the right to contract. You are given the freedom to contract provided it is within the frame of law. You're not violating the law. So the contractual right should be exercised in the right manner at the time when the company's memorandum and articles of association are drafted or a shareholders agreement is drafted to support it, clearly defining what exactly are the tag along and drag along rights that you want to implement in the company. Another one, Article 15, which is re-domiciliation. Now, if you have a company earlier in the mainland, and if you want to close this company and start in the free zone, literally you would have had to close that company in the mainland and open another company in the free zone, which will be looked at as a newborn. You lose your history, you lose your credibility, you lose your market positioning, goodwill, whatever banking relationship, everything is lost when you close a company. Now, with the new company law, which has come into force in 2025, we are able to re-domicile the company, either from the mainland to one of the free zones or vice versa. If you are established in a free zone, you can move to the mainland also without losing your history, without disturbing your banking arrangements relationship, without disturbing any of the contracts you have signed with your customers. All you have to do is notify them and get their approval also on it, or just notification also may be sufficient because we are yet to test it before the court is a new development. I'm of the opinion that a notification would suffice because it's a continuity, just redomiciliation, nothing else is changing. So we'll go to the next stage now. I hope it's clear what I explained about these three aspects. Now, generally, if you look at it, the investor protections which come from the civil transaction law, the tax laws, and anti-money laundering legislative frameworks. So first of all, let's look at the civil transaction law, which says that in Article 120, it is law number 25 of 2025, recent development again. Earlier, it was law number 5 of 1985, very old. Now completely amended. Most of the provisions have been amended with the new civil transaction law in 2025. I'm only taking three articles, bringing it to your attention. Otherwise, it's thousands of articles. I will not be able to do justice. So Article 121 says, everybody should act in good faith. The liability for bad faith conduct is but limited to actual losses. This is protecting the investors from opportunistic pre-contractual behavior. So I have to tell you the truth. I have to act in good faith in negotiating my contracts with you. That gives you an added protection beyond a statutory protection or a contractual protection, whether I acted in good faith or bad faith. That's a serious question to be decided in interpreting the clauses and protecting the rights of the parties, which I believe is a very good development. Then disclosure. Article 122 says that material information must be disclosed. Clauses excluding this obligation, whatever disclaimers you want to put it, it will be void as a matter of UAE law. This is strengthening the M&A, mergers and acquisition due diligence. Now, earlier it was like a hide and seek. If I want to disclose something, I will disclose. Otherwise, it's your duty to do the due diligence exercise, legal, financial, technical, and find out if there is any problem in the company. Now it has been a statutory obligation on me when I'm selling my company to disclose all material information to you. Take it as an example of I'm selling my car to you. Defect in the engine, I have the duty to disclose all the material information to you. I got an announcement the recording has started now. That means I was not being recorded earlier. Anyway, I'll continue. So the tax framework. The tax framework is Federal Law number 47 of 2022 and the Ministerial Decree, which is 139 of 2023. All of you are aware, it's a hot topic now, 9% corporate tax on profits above dirhams 375,000, which is almost equivalent to $100,000. But It's one of the lowest in the major economy rates. You look at any other economy, it's much higher. 9% is the lowest. Okay. And 0% qualifying free zone income. If your company is in the free zone and if you're in the qualifying category, your tax will be 0%. And you're all aware of it. No personal income tax in UAE. This is a very big attraction. And no personal income tax, no capital gain, no inheritance tax. Imagine many countries outside, even in Europe or America, the inheritance tax goes up to 45%. So suppose I pass away, I have three children. My children are getting a lower share compared to the government. The government is my biggest legal hair there. Here we don't pay anything. The entire shares, whatever is according to the inheritance rights prescribed by the law, it will go to my family members, or I can write a will. It will go as per my testament, the will. How I decide my property should be divided between my legal heirs or even strangers, but it doesn't go to the government anyway. So the Spain and UAE has signed the double taxation agreement. This is very important. The article numbers I have referred, and this is a 5% cap on withholding tax also. So there will be unrestricted profit repatriation also happening there. More importantly, what DTA actually does is that investors are given a clear idea which government is able to tax and to what extent. There are no surprises. And there are dispute resolution mechanism. If there is any confusion, there is a way to discuss, conciliate, and resolve that problem. So it facilitates the investments a lot, the double taxation agreement, which UAE has signed with Spain. Coming to AML, CFT, and FATF, Financial Activities Task Force, that is FATF, AML is anti-money laundering, and the CFT is counter-financing terrorism. And the AML grey list exit, that's very important. The cabinet decision number 109 of 2023, federal decree number 10 of 2025. The grey list removal. Unfortunately, UAE was put in the grey list in 2022. In 2024 itself, within 2 years, we got removed from the FATF grey list. And all efforts were made by UAE before and after to bolster AML landscape with the new laws that were enacted afterwards. So now it's a safe place. Now transactions can happen between UAE and any foreign country as a normal transaction because we are no more in the grey list from 2024. Beneficial ownership. So Cabinet Decision 109 of 2023, there are stricter registration expanded. This is DNFPB, which is designated non-financial businesses and professions. Reporting is mandatory now, and this is stronger FIU enforcement. So that is very important in any finance company, professionals or businessmen, even if it is non-designated, there are mandatory reporting and they're highly regulated. Banking regulations also come here, which is stricter guidelines for financial regulations. This is to withstand uncertain environments and cross-border flows. Corresponding banking and cross-border fund flows restored to full international standards. This is the aftermath of removal from the grey list in 2024. So coming to the next slide is about the financial free zones, mainly DIFC and ADGM. I'm sure all of you must have heard about it. It's nothing new. Dubai International Financial Center is an independent English common law courts staffed by international judges. They have a separate courts, so any company incorporated in DIFC automatically falls within the jurisdiction of DIFC court. And even if you are not incorporated or registered in DIFC, there are opt-in clause in the contract. When you're signing a contract, you can decide that any disputes arising out of or in connection with your contract will be adjudicated according to the laws of DIFC by the DIFC court or ADGM court. Both are same. One is in Dubai, the other one is in Abu Dhabi. That's the only difference. Otherwise, pretty much same English common law jurisdiction, independent courts. DFSA regulates financial activity to international standards. Same happens in ADGM, FSRA, Financial Services Regulation Authority. It applies standards equivalent to FCA and FSMA, which is don't have courts. Only DIFC and ADGM has their own independent courts and their own legal. You have a judgment from a Spanish court against me, but I am sitting in UAE. My assets are here. What do you do for enforcement? So DIFC or ADGM courts comes as a conduit, and you can ratify that judgment very quickly and get an enforcement order here locally. So my assets, it directly executes that for a Spanish judgment against my assets in UAE. I cannot escape. So 2025 commercial company law, the re-domiciliation regime is very interesting, as I mentioned earlier. And that allows companies to re-domiciliate if you want from mainland to free zone or free zone to mainland as per your requirement, subject to certain conditions. Certain activities may not be allowed in the relevant free zone where you want to actually migrate to, and certain activities which are practiced in the free zone, that similar activity may not be available in mainland. But overall, 80-90% I would put it, subject to national ownership requirement on certain types of activities. This re-domiciliation is a very interesting development. Without losing your history, without losing your banking relationship, without losing your customers' goodwill or credibility, you are able to re-domiciliate into a different jurisdiction. Now, next slide. Again, I have briefly touched upon this, so I don't want to repeat. A partnership built on substance. That's what I call it, because you see here the 3.3 billion, the non-oil trade in 2024, as I said earlier, increasing year on year by 17%, and $7 billion investment from UAE to Spain. We are the largest Arab investor in Spain, and 3,000 plus companies have Spanish ownership or partnership in UAE. And we are number 6, UAE is number 6 ranking non-EU export from Spain. The key milestones, this is new. See, the direct taxation agreement was entered into force in 2007. I mentioned to you already what is this DTA. In February 2022, the Spanish Prime Minister's visit to UAE, the joint declaration on investment was made. June 2025, but there is a big gap, you see, 2007 to 2022. But afterwards, you see the development is quite fast. From 22 to 25, it's only 3 years. The 5th Joint Economic Committee, UAE and Spain Joint Business Council, MOU was signed, Memorandum of Understanding, I mean. And in January, immediately, within 6 months, the next development happens. UAE-Spain Strategic Partnership Joint Statement was made. So you can see how things are speeding up. Things are expedited compared to the past year. And interesting developments, I will have more on the next slide. See, Spain and UAE, BIT, status and protections, okay? BIT is Bilateral Investment Treaty. This is a very important aspect. If any big Spanish businesses, like a big listed company in Spain, wants to do business with UAE and your counterparty is the government, for example, the metro project in Dubai or any oil field businesses or anything you are doing with the RTA, so infrastructure projects, all these, your counterpart, the contractual party on the other side will be the government. So suppose you enter into a dispute with the government, what happens? UAE courts are very fair. They're not biased. They give equal treatment. DIFC courts are also fair. ADGM courts are fair. But still, a company in Spain, will it feel totally comfortable fighting against the government of UAE before a UAE court? I leave the answer to you. And if you choose arbitration as a remedy, you choose arbitration in UAE or in Spain or in any other neutral jurisdiction. Finally, if you want to enforce the arbitration award, which you may get against the UAE government, you will have to come to UAE. I'm taking UAE just as an example here. It applies to all countries across the globe in bilateral investment treaties. So when you come here to enforce that judgment against the UAE government, again, that arbitration award has to be ratified by the execution court in UAE or a regular court in UAE, and then you do the execution. So again, you are at the mercy of the local courts here, even if the arbitration takes place abroad. This is where the importance of bilateral investment treaty comes. There are active clauses in the treaty. And finally, for dispute resolution, you can always choose a neutral jurisdiction, which I'll explain a little later. Now, first of all, the step 1, if you look at it, it's 2003. And see the gap between step 1 and step 2, 2003 to 2022. Only in 2022, the joint declaration was made,